Welcome back, everyone. For better or worse can take on new meaning when you're deciding how to file your taxes as a married couple. Well, as part of our Taxes Made Simple series presented by TaxAct, I'm joined by Erica York, Tax Foundation Senior Economist and Research Manager. Thank you so much for joining me today. So first, I want to talk. Great having you. So then, in terms of changes that married couples need to be aware of, what would have changed for them from last year's tax season versus this year?
So there are a few potential tax increases that could particularly affect married couples that were included in President Biden's budget proposal that was released last week. In 2022, under current law, the top tax rate of 37% kicks in at $650,000 for married couples. It kicks in at around $540,000 for single filers. President Biden's budget proposal would raise that top rate to 39.6% and have it kick in at a lower threshold starting at $450,000 for married couples and $400,000 for single filers. So what we would see under that proposal is that top earners would face a higher rate, and they would also face a worse marriage penalty than exists under current law.
So talk a little bit about marriage penalties. What currently exists and what triggers them?
Yeah, so a marriage penalty happens when the tax bill that a married couple faces is higher than the tax bill that they would face as single filers. Typically, married couples with similar levels of income, whether they're both high income or both lower income, can face marriage penalties, while married couples with disparate levels of income can actually face marriage bonuses. So right now, the tax brackets as they're structured for married couples are exactly double the tax brackets for single filers, except for that top rate. So as far as tax brackets go, most lower and middle income married couples don't face a marriage penalty, but higher income couples do. And then there can also be differences across other provisions like deductions and credits, depending on where they phase out, that can create a penalty for married couples.
And obviously, you mentioned some of these top earners. Obviously, that doesn't affect most Americans. Most Americans, the average American, does not earn as much as that. So, how do you figure out if it's better to file jointly versus separately, especially if perhaps you have two very different earning brackets within one couple?
Yeah, so if you have a separate or very disparate levels of earnings, you're probably going to be better off as a joint filer. And that's because the additional income from that second earner probably isn't going to tip you into the next highest bracket. It's when you have two earners with similar income levels that you can get pushed up into a higher bracket and face higher tax rates on your combined income than you would if you filed single. What filers can do is calculate their taxes both ways and see which way they're better off. Most times they will be better off filing jointly. And if you do file separately, there are some tax credits that are no longer available to you, like tax credits for education. And there can be limits on other tax credits, like tax credits related to childcare.
Now, a lot of times you find that couples barely even have the money conversation, let alone the tax conversation. So what are some of the biggest mistakes that you see married couples making when they do try and file together for the first time?
Yeah, typically what the research tells us is that these marriage penalties, they don't really affect people's decisions about whether to get married, but they can affect people's decisions about how much to work, particularly for that second earner. What the research shows is that when couples get married, because of these marriage penalties, they tend to have lower earnings over time because of those negative incentives for that second earner, because they tend to face higher marginal tax rates than they would if they were filing on their own.
And what about those who receive perhaps pandemic-related aid or unemployment benefits? What do they need to know about filing with a spouse this year?
Yeah, there's actually some interesting advice coming out that we're seeing from some tax preparers because of the different cutoffs for economic impact payments, as well as the expanded child tax credit. Some married couples, particularly we're talking about higher earners, are better off filing separately because they can actually get a larger benefit in doing so due to the pandemic relief provisions. But again, that's something that you'd want to check with your own tax advisor on to make sure it makes sense for your situation and doesn't end up, coming back and biting you because of other tax credits you could lose out on. So it's very situational, but there are instances where, because of the way the pandemic relief was structured, it might make sense to, for 1 year, go married filing separately rather than married filing jointly.
And as we know, obviously, a lot of people have been moving house, a very tight housing market at the moment. What should people be aware of in that sense, in terms of how to file if you have moved and perhaps only one of you is on the deed? Or how do you approach that in terms of mortgages and tax rates?
Yeah, there are a couple of tax benefits for being a homeowner. The mortgage interest deduction, if you are an itemizer, allows you to deduct interest paid on up to $750,000 in home value or principal value. And there are also deductions for state and local taxes paid, which can include property taxes. To take advantage of both of those, though, you have to be an itemizer, which means that all of your itemized deductions would need to add up to more than the standard deduction amount in order for that to be beneficial for you. Another example of a marriage penalty that we see is that the state and local tax deduction is limited to $10,000, and that's whether you're single or you're married. So if both of you were taking the state and local tax deduction previously, you could both be getting $10,000, but once you get married, that is limited to $10,000 across both filers.
There you go, all for better or worse. There it is, your taxes. Erica York there, Tax Foundation Senior Economist and Research Manager. Thank you so much.